Well, good morning, everybody. I'm David Maris. I am joined here with Bob Morris and Kevin Bakes Baker. This is Wall Street Beats for January 22nd, 2025. We're going to talk a little bit about oil and gas. We're going to talk about some other names that Kevin's been looking at, like Bridge Bio, maybe, which I don't want to talk about, although I'm not short, but I'm not long either. And then I'm going to talk a little bit about healthcare. So maybe we could first start. Bob, the president has come out with a few different things about oil and gas. Drill, baby, drill was in his inaugural speech. What does that mean so far? And any executive orders or things that have come out so far for oil and gas? What does it mean, or does it mean anything?
Sure. Thanks, David. So we sort of had a 1-2 punch in that the first day he signed an executive order titled Unleashing American Energy, which came out and said, look, we're going to sort of unleash all these regulations. We're going to go in and try and identify where they've been slow to approve pipelines and infrastructure and all this, and we're going to get that cleared out. And the bottom line is that the order aims to speed the permitting and construction of interstate energy transportation and other critical energy infrastructure, in particular pipelines. And, in our view, that's a big plus near term for the pipeline and infrastructure companies, because as you know, under prior administrations, there's been a lot of permitting delays and things that have held up getting pipelines approved and constructed and in place. And if we can clear that up and make that a lot smoother and a lot easier, then there are a lot of pipelines, a lot of infrastructure that needs to be put in place. And we recognize that I actually already had a full position in Williams companies, but then I added to ET and Kinder Morgan yesterday. And then yesterday, as you know, Trump came out and announced the Stargate project, which is going to be huge because they're going to invest initially $100 billion and maybe up to $500 billion over the next 4 years to build out all these AI data centers. The problem is the energy infrastructure to fuel those or power those doesn't exist today. And so as you look to build those, you've got to build out the power infrastructure and the power sources for that. In near term, natural gas is going to be the predominant fuel source for the power for these AI data centers. You're not going to have these small nuclear reactors in place anytime soon. And other sources of energy aren't going to ramp up as quickly as you can provide natural gas or gas-fired power to fuel these data centers. So that was the other big plus on top of what we got from the first day executive order on unleashing American energy. And it's interesting that he announced under this Stargate project that the first data center is going to be in Texas. Well, that makes a lot of sense. And I've been arguing all along, why aren't we building these data centers in Texas? Because you've got a lot of natural gas that's very cheap, and a lot of it's constrained by the lack of infrastructure out of the Permian Basin. And this natural gas, these companies in the Permian Basin, remember, they're not producing natural gas because they want to produce natural gas. They want to produce oil. And when you produce the oil, you produce the natural gas along with it. You can't produce one without the other. But the reason the natural gas is so cheap there is they want to produce all the oil they can. And they get this gas that comes out of the ground with the oil, and they got to figure out some way to get rid of it. And at one point, they were giving it away or actually paying people to take that natural gas. So it makes a huge amount of sense to put this first data center in Texas where you've got very cheap, available natural gas. And there's some infrastructure that needs to be built out to provide that natural gas to the power plants or generators to generate that power. So as we looked across the spectrum here, the four names I pointed out on the pipeline infrastructure side that I think would be the biggest beneficiaries near term are Williams Companies, Energy Transfer, Kinder Morgan, and Plains All American. And I say they're the biggest initial beneficiaries because that's going to start day one in trying to spend this $100 billion to build these AI data centers. To your point about the drill, baby, drill mantra, we have yet to see how he's going to incentivize companies to drill more, because right now, all the public companies have no incentive to drill more. They're doing what they promised their shareholders they would do and have been rewarded for it in returning significant capital to shareholders. So there's really, and that's helped their stock price. And I still think they're undervalued on that basis for the discipline they've exercised here. But they're not going to change and go back to their old ways that wasn't rewarded of just spending all their cash and ramping up production willy-nilly without focusing on the return. So we have to wait and see what it is that Trump does to try and get more drilling, or maybe it's on the private side and loosening the purse strings from private capital You get a lot of private companies to come in here and drill more, do more, but still, that takes time. You just don't go out tomorrow and drill a well. You've got to do surveying, seismic, planning, and it takes a while to drill that. So initially, I think the money initially flows to these pipeline infrastructure companies. And the thing I'd point out, Williams, they've got a long pipeline for both power projects and LNG export facilities. Kinder Morgan is purely focused on natural gas. Those are both C Corp, so it's a little bit simpler as far as the distributions. ET and Plains All American are you get a K1 because they're limited liability corps or partnerships. And so ET is actually also, or Energy Transfer is also building power generation facilities. So you've got that on top of the infrastructure build out. Plains is more focused on oil infrastructure than natural gas. So it's at the bottom of the list of those four. But those are the names that I would look to. And again, I've got a full position in Williams already. We recommended that last year. The stock's up over 33% since we recommended it here on Wall Street Beats. And yesterday I bought a little bit of Energy Transfer and a little bit of Kinder Morgan.
So hey, quick question on these big data centers. And I know a little bit, very, very little. My youngest brother was the first person to build a data center in Vermont, and he ended up building quite a few of them and ended up selling that company. One of the things they need is to be cool, and that's why they're sometimes located near a lot of water, like moving cold water. Yeah. Texas, the last I checked, is pretty hot most of the time. How do you overcome that challenge? Or is it just, no, it's just cooling, electricity and cooling?
It's interesting because we always talk about the Permian Basin. And basically, the Permian Basin has been around for over 50 years. And at this point, what it is, it's a giant water skimming project. And when you produce oil in the Permian Basin, for every barrel of oil you produce 4 to 5 barrels of water. And right now, that water is being re-injected into deeper reservoirs just because they have no place else to go with it. Now, be able to use it for these data centers, and I'm not sure who's doing this or exactly the process, but you're going to have to treat it and clean it up a bit. But there's water there. I mean, there's water being produced with the oil that they're re-injecting in the ground to get rid of it. It's not potable water. It's not, fresh water in that sense, but in some form, it's going to be usable.
Okay, so that sounds like a win-win especially for Texas, but it does sound like an amazing project. But so what are the 4 companies you said are the best beneficiaries?
In our view, Williams and Kinder Morgan, I'd put first. Those are C Corp, so it's a little simpler distribution. You don't have to file a K1. And then Energy Transfer and Plains All American.
And Kevin, when you look at those companies, is there anything technically that you say, hey, listen, I'm worried about this?
No, because they're bullish charts. I get worried about the ugly charts. The question I had, here's Williams, here's ET, Phone Home. I mean, these are new highs, big volume, clear, lower left to upper right trends. KMI, which is, mom and apple pie in this business, in my opinion. Richard Kinder. Plains looks great. I mean, look at these. There's nothing not to like. Here's my question, though, is how much of this is based on the commodity, the underlying commodities? I always thought these guys were toll takers, and so the commodity price didn't matter. And with higher bond yields, why isn't that more competition for these people than these charts would suggest?
Well, they are basically tolling agents. And that's the one thing when we recommended Williams and said, look, it's, you're getting, it's really not dependent on the commodity price. You're getting a tolling fee for all these projects that they're building out. And they've got this huge pipeline of projects. In the meantime, they're paying very nice dividends. So Williams, the current yield, even after yesterday's run, and they were all up about 3%, the yield on the dividend for Williams is 3.2%. On Kinder Morgan is 3.8%. And then on Energy Transfer and Plains All American, which are, partnerships, is 6.4% and 7.6%. So those are huge dividends on those names. And they've been increasing those dividends every year. These are dividend growth companies for the most part.
Are these dividend aristocrats, like 25 years in a row of raising dividends, that kind of a thing, or they can't have that kind of consistency?
It's pretty consistent. I don't know if it's 25 years, but I was looking at the charts in their presentations last night, and they were all increasing dividends for the past 5 to 10 years. I didn't go back further than that, but yes.
And one other thing. We've talked on this show about drill, baby, drill. That's not a reality because they're getting paid to stare at the ROE line and the ROIC line. But drill baby drill isn't for us. Drill baby drill is for Russia and Iraq. Am I wrong? I mean, this is make Russia poor again, make Iraq poor again, and drive their economies to their knees. Isn't that really what he wants to have happen here?
I think he does want to supply more crude oil to the world from the U.S. And I think what he may be setting up is some bilateral agreements. For example, he goes to Europe or China, says, look, buy more oil from us, and maybe we'll go a little bit easier on the tariffs or some sort of tit for tat. But I think he does want to produce more oil from the U.S. and make the rest of the world more dependent on our source of energy or crude oil and natural gas. And we want to export more LNG to Europe. So I think that's part of it, is that, yes, we want to sort of push Russia and Iran out of the way, and we want to be the supplier of choice rather than them. And we can go to China and say, look, China, you've got to buy crude oil from us, and maybe we'll go a little bit easier on the tariffs, but we don't want you buying it from Russia or Iran. You're going to buy it from us, and we're going to ramp up our production to provide that to you.
Got it. Thank you very much.
Mm-hmm. So, Kevin, what do you have for us today? I know you were looking at a couple names that I'm interested in. And the others.
Yeah, and whenever we talk on this show and you guys bring up a name, either bullish, bearish, I always add it to my list. And I go through this every single night because I'm psychotic. And I just want to see, what's kicked up dust. Because, maybe you're staring at these things every day, maybe you're not. And so I just like to highlight, especially to our members, the sausage making behind the scene. Hey, here's what I see going on a name we haven't talked about on the show in a while, and I think you ought to know about it. So I'll start with this. Let's get this out of the way, because I thought you were involved here, and if you're not, then I'll shut up about it. But this is Bridge Bio, and this has clearly turned the corner. The 50 days up to the 200, the 200 is going up. It takes out this new high here at all. I think you go to this 41 level, and then I think you have further upside after that. So there's a change happening here. Maybe it's not sustainable, but this is a positive trend and change in the chart that I just bring of note if anybody cares on the fundamental side.
Yeah, so I think I had mentioned in a previous thing that I'm not involved, not for any other reason other than that the CEO had posted a thing on LinkedIn where I think he pre-announced some positive data. He posted.
My bad. I forgot about this.
Yeah, he had posted something on LinkedIn that he later explained that was to remind himself to talk to his children about how to persevere through tough times. And it just didn't make any sense. And it was just silly.
Okay, I get it.
The SEC should have looked into it because it was, to me, clearly a violation of the spirit of the law. But who am I? I don't work for the enforcement part of the agency. Yeah, so I'm not involved. I wish I were. But I am involved with the company that you have the chart up right now, Lifetime Group Holdings. They had pre-announced really great results. And, I've been involved for quite a long time. I think it's just a really good consumer strength story. But what does the chart say? Should I be more worried than I am?
No, you guys, I'm so glad I'm finally here. New highs are your friends. New highs is like a warm embrace at the door that you're right. And especially when it's accompanied by big volume here, this is 3 trading weeks of consistent up volume. So you take out 2711, the stock is absolutely telling you that more people go into Lifetime Group Holdings. And yeah, there's some seasonal, New Year's resolution element to it, I'm sure, but it doesn't work all the time. And this is just a clear new high above 2711. That is confirmed by the volume, and the follow through is really impressive in my opinion. And you also see this with I think it's Berna's Planet Fitness. That looks great too. So probably Lifetime's higher end and Planet Fitness is lower end. Well, and maybe Ozempic gets the first 15 pounds, and you want to go after the next 15 pounds, and that feeds it. I don't really care, but this is clearly bullish. But new highs are our friends. New highs are telling you you're right, in my opinion. Not you, all of us, investors.
Well, mostly me though. I'll take the credit. I'll take the win. Look, it's a really underfollowed name. It's an underfollowed name. It's an underfollowed name, and people do confuse it with a lot of other, like, oh, it's a workout place. And it's really so much more than that. The average customer is spending several $100s, not $15 a month. And they're going in and they're having childcare and they're having lunch for $30 and they're buying the supplements which they just launched. And so it's really a unique company. And if anyone has the time, they should look into the background of the entrepreneur who started it, sold it to private equity, came back and revamped it again. So a really, great immigrant story, like really is inspirational. I don't own it for that. I mean, even though I've met him and he's quite impressive, I own it because people are spending more. The average consumer is spending more each time they visit. So it's a good flywheel.
And David, I think I told you before, there was a flurry of new signups over the Christmas holiday because my daughter came home from college and a bunch of her friends, they wanted to go work out. And all of a sudden they all went and joined Lifetime and they're all going to the gym for the classes. There's this uptick. And I think part of it was you had to have another member sign, and my wife signed up. And so all of a sudden you really had an uptick of people sign up over the Christmas holiday because all these college kids that were home over the holiday wanted to go work out and they joined.
Yeah, so they have so many places now that you can do that, and it's portable to other places. What I like about it is you hear horror stories about Planet Fitness and how people sign up and then it's very, very difficult, even though it's super cheap, very difficult to quit. You have to do it up until very recently. You had to do it in person in the facility that you signed up. And a lot of people just want to call up and say, hey, cancel me, or email. And they before very recently, you couldn't do that. Well, Lifetime makes it super easy. Like they don't want people to be angry with them. They say they want to be the Disney of workout places. I don't think they're yet at the level of Disney, but I think they're pretty close. If a workout place can be that, I think that's that. And so I like the stock for, like I said, it's kind of a bet on the consumer. The high-end consumer is going to continue to spend money on themselves. And what better place to spend money than on healthcare?
Have you seen any studies to that dynamic that I mentioned, where Ozempic gets you the first 15 and then you get inspired to go for the next 15?
I haven't seen anything listed about that. I will say that the trainers there have mixed feelings. They say they notice that when people started and they start losing weight, that they suspend their workouts and then eventually they come back. I think it's probably because when you start to have some calorie restriction, you don't have as much energy, and then you kind of stabilize and feel a lot better. So the first little while you're nauseous, but I haven't seen any studies on this. This is just asking trainers of, hey, has Ozempic hurt your business? And they're like, kind of. So, but again, it's not showing up in the overall Lifetime group holdings thing. Anything else that you have for us?
I do. And again, I like to stay current with the good, the bad, and the ugly. This is the good. This is Range Nuclear Renaissance. This is the Constellation Energies, the Cameco uraniums of the world, the small marginal reactors. And this is just, again, this is confirmation. If this happened on low volume, I wouldn't care so much. But this is people finally saying nuclear is for real. We need it for AI data centers and a myriad of other aspects, and it's time. And Fukushima was in 2007. We have worked all this off, and now we need nuclear power to be kicking in as much as humanly possible. And I went through the top 10 of the holdings of Range Nuclear Renaissance, and they all look fantastic. So I bought this here. This is my number 4 name. Obviously, new highs yesterday. It's 11% of the portfolio. I bought it 4 months ago, and I'm up 33%. So this is what we do here at Wall Street Beats, folks. We just make money, and we tell you that we're making money. Yeah, I can't. My eyes are too bad. I can't put down the buys here, right here. This is September, and I did this on the initial show when I talked about this. But here's the buy here, and I do this with all of my names, and then here we are at 48.99, big volume over here, relative strength, new high, and this is just getting going, in my opinion. This is Constellation, but Calpine. The other day, I thought Calpine was dead. That's how moribund I thought Calpine was. Well, Constellation sees some beauty there. And now, here's the other part of this. Stay tuned to this space, because at some point, I'm going to come in and say, I bought XYZ uranium play, and I think you should too for these reasons.
But this is when you look at it and you say, hey, listen, I'm up 33% in a short period of time, where some people would say, you know what, I'm going to sell 20% of my holdings and just take some of the profit. You're saying, look, it looks great, I'm sticking with it. Are you going to add to it here, or are you just going to wait for something, a down day? Or I mean, it's already 11% of your portfolio, so that's pretty much a full position for anybody.
Well, and I'm glad you mentioned that. When I buy a new position, it's 10%, and I kill my losers swiftly, and I let my winners run. And I'm right enough that I can do this. Anything that gets down 15% from cost, I shoot, and anything that goes up, I let ride, and I check my valuation biases at the door. This is clearly going up. If I had some extra cash and this was below 10%, yeah, I probably would have topped it off because it looks that good to me. But this is a hold, and when I take the original investment out after I double my money in less than 12 months, which has happened with uranium twice and Bitcoin once. And
right.
So that's my.
What else? So, hey, let me ask you, if I don't own it yet, do I buy it today or do I wait for a little bit of a pullback here? If you don't own it yet, but you want to buy it, where do you buy it at?
You talking about nukes?
Yeah, Range Nuclear Renaissance. If I don't
and
own
UKC, I would, then I got so many quirky rules, but I stay within 5% of breakout points. So if I was new to the story, I would be within, I'm going to make it around this number. Here we are at $47.95, and 5% of that is what, $51, something like that. I buy it. I mean, this is 3 times volume, 5 times volume today. I would just buy it, and maybe not 10% if that's not your bailiwick. I understand. I like the 10% look back here when it was a much smaller ETF and lesser known. But to me, this is a buy. And I'm not doing it because I'm full, but that would be my take.
Okay. Got it. And what else do you have for us?
Yeah, but stay tuned for uranium. The uranium story is monstrous. It has been for 5 years. I've been all over it, and I'll come back at some point and say, Wall Street beats.
But it's not today, so I want to know what else you have.
Oh, all right.
You're previewing something you might do in the future. I want to know today.
Well, because you know what I find?
All right, I don't. Let's go on. What else do you have for us?
Because the first time I bring it up, you won't do it, and most people won't do it. They got to hear it a few times before they finally say, "I understand it now, and I want to be involved." This is UAE. I just bought this back here at 1637, I think was the number, and it's just another idea that is now 10% of the this is my number 7 name. It's about 10% of the portfolio. Bought this less than a month ago. We're up 4%. But I just caution everybody to look outside the U.S. There's a lot of great things going on outside the U.S., and I'm highlighting a lot of them, and our other members are. But, the UAE is going through a transformation. With its 5% energy, if oil gets going, this is going to benefit. But I think it's going to work regardless.
All right. Is that it for you today?
Yeah, no, you're insane.
There's a whole bunch of stuff. I'm not saying, by the way, is that it? Like, there should be more. There's more than enough to.
Yeah, no, I just make 30. All I do is make 33% in 4 months. That's all. That's all I do. That's it. Sorry to bore you.
If it's just
if
that
your
easy.
wages.
Well, I want to talk a little bit about healthcare. There's lots of news going on. I'm not going to go through all of it, but it looks like Pence's group is starting to run ads against Kennedy, which is just not what the president needs at this point. But it's not what Kennedy needs either. I still think that he gets confirmed. He deserves to be confirmed. But, running ads against an HHS secretary nomination I think it's unprecedented. It just seems pretty stupid to me. We'll go with that. There's been nothing super healthcare related announced so far related to Trump's 200 executive orders and proclamations and the rest. Healthcare, though, doesn't seem to care. It's doing quite well. Yesterday, it doubled the S&P 500. It was up about 2%. It was up 1.7%. And what's great about it is the breadth. It was really great. Winners outnumbered decliners 30-1 yesterday. It's continuing today. It's doing well. The BTK is a little bit above, and the HLV a little bit above the market's increase. So 2 days doesn't make a trend. 3 will. So let's see how tomorrow is. But no, it's biotech and medtech doing quite well. There are the vaccine companies were doing really well. Moderna in particular was up 5% yesterday. I think it was up 10% today. Let's see, 9% today. All follow through on they're getting a $600 million deal in bird flu vaccine. I don't think that deal should have been announced the week before the president's coming in. It seems like you want to hold the new administration to trying to spend less, and then you do this. But whatever, if it helps us protect us against bird flu, I guess all great. But not sure that Moderna should have gotten that the way they did. Summit Therapeutics was up 16%. They have a drug that's in competition with Merck's Keytruda. Bob, you had asked before the show began, why was Merck down? It's a little bit because of that Summit's data is a Keytruda killer. Keytruda goes off patent in a couple of years anyway, so who knows what happens with Summit if they stay independent or not. J&J reported, the other big news, and I have some friends who are quite hysterical about healthcare news. So they said the president, look what he did. He withdrew us from the World Health Organization. Why? How could he do that? And first I asked, what has the World Health Organization done for you? Let's really talk about it. It's great when you're a healthcare analyst and you need statistics from around the world and they compile all these statistics. And that's great because you have the Guinness Book of World Record is a great book and all because you want to know who can eat 50 avocados in a minute. But the World Health Organization for the US, I'm not sure how much they really do, but the real reason that he did it, and he was asked the question, don't you believe in having a central coordinated effort for healthcare, especially for emerging diseases? And he said, yeah, of course, but we were paying $500 million while China was paying $39 million, and it doesn't seem right. It doesn't seem fair. And so let's figure out what makes sense. To me, that makes a lot of sense from a public health standpoint. Yeah, of course we should have someone that's going to tell us Ebola is breaking out. We need to be really careful. No one argues with that, but the straight dollars. But I will say that got a lot of press. And what are the implications? I don't think there will be a long-term implication because I think we'll end up joining it back at a much lower rate. Let's see what other news there was. Walgreens Boots was down 10% yesterday. The DOJ filed suit against them on Friday. Never great when you're going against the DOJ, especially when you're a disliked, over-levered company that's weak. So that's about it for healthcare. The names I still like are the names I still like. There hasn't been a big change in my portfolio. I added a little bit to hims and hers. There was some news this last week that they're going to kind of delay. They may delay talking about resolving the shortage for tirzepatide. I just think the quarter is going to be great. So I want to own more into the quarter. But if anyone has any questions on healthcare, happy to answer it. If not, we're going to wrap it up for now. All right. Well, there we go. Long and strong into a good week in healthcare, and oil and gas is going to be your friends, and be ready for some uranium and go nuclear with Kevin Baker. So thanks, everybody. Have a great day.
See you, folks. Thanks.
Mm.